Hey everybody, welcome back to my channel. The stock that we are reviewing today is Costco, the warehouse retail giant. And this evening, as I record this video, they released their most recent Q4 2023 earnings. And so when better is there a time to jump in and analyze this company than right now? Thank you so much for stopping by, and let's get into it. So the information I've pulled up to briefly go over Costco as a company is a little bit dated. It's from September 3rd, 2023, but this information is all basically unchanged since then. So please don't worry about it being just, 3 months too old. So Costco, if you aren't aware, is a wholesale company that sells to retail clients in basically an open warehouse type format. So there's nothing really fancy. It's just these giant open hallways with pallets of products, and you take a product off the pallet and you move on. And so as of September 3rd, Costco is the third largest global retailer and the 11th largest company in the Fortune 500. They have over 126 million square feet worldwide, and they employ over 310,000 employees. They have 861 warehouses, which is what they call their retail stores, with the vast majority of those being in North America. Costco is a membership-based retailer, so you do have to buy a membership in order to shop there, and they currently have 71 million different households with memberships, combining to a total of 127.9 million total cardholders. What is really impressive is that they managed to renew 92.7% of their memberships, and those membership fees bring in $4.6 billion in the last 12 months. Just let that sink in for a moment. Consumers are paying $4.6 billion a year just for the right to shop at Costco. They haven't even bought anything yet. That is really, really impressive, and that's basically free money. In the company's Q1 earnings release, which I believe I misspoke earlier and said Q4, Costco's fiscal year starts in most companies' Q4s. So they have started their fiscal year 2024 with this report. But in this Q1 earnings, Costco beat earnings estimates, and they announced a potential membership fee hike looming. So those billions of dollars that we just saw that they bring in every year just for the right to shop at Costco, those fees are going up, so they're just going to get even more free money to hold on to a membership. Moving lower, we can see that the company beat on its adjusted earnings per share, which it announced at $3.58 per share versus Wall Street's expectations of $3.41 per share. Revenue came in at a slight beat as well, up 6% year over year to $57.8 billion versus $57.71 billion expected. Now, for slightly less good news, same-store sales in the United States did jump by 3.8% last quarter, versus 4.3% expected. Compare that to other retailers right now, like Target, which I reviewed earlier. Target saw a 5% same-store sale decrease. So for Costco to still continue to be growing is very good news, even if it is less than what Wall Street expected. Costco is also very well known for its special cash dividends, which are dividends that it pays out in irregular moments and often at very, very high amounts. So in this case, Costco is paying out a $15 per share special dividend that they just announced. This is their fifth special dividend in 11 years, and it's going to be paid out on January 2nd to its shareholders. And one last thing I wanted to point out is that the company's e-commerce sales growth was up 6.3% versus 6.1% expected. So the company is moving to a little bit more e-commerce, which is really great to see. And that e-commerce is growing slightly faster than analysts expected. Oh, and one more thing. Wall Street, as I said, is expecting Costco to increase its membership fees. I don't believe anything official has been announced, but there is a growing sentiment that this is coming sooner rather than later. The base membership at Costco, which is called the Costco Gold Star membership, costs $60 a year, while their executive membership is $120 a year. Now, I want you to think about this for a second. If Costco increases its base membership from $60 to $65 per year, that's only $5 more for each consumer. But with 72 million paid households and 129 million cardholders, that really adds up. $5 extra is an extra $600 to $700 million in Costco's pocket for basically nothing. I really can't stress how big of an effect this has on Costco's bottom line, and I think it really should be sinking in that Costco has a lot of power to earn a ton of money for doing basically nothing. I mean, that's kind of every company's dream, is to have as little input cost as possible and make a maximum amount of profit. So while you're letting that sink in, please just take one moment to like my video and subscribe to my channel. It would really help me out, and I really appreciate your view and you coming to watch this video. Thank you so much. You're the reason I continue to make these videos, and I cannot wait to bring more content to you in the future. With that, let's move into the financial numbers. Revenue growth has been great at over 12% for the last 5 years. And before I get too far into this, I just want to make sure that you know that the trailing 12 months and the 2023 numbers are going to be exactly the same for all of these. So this looks like Costco is leveling out, but in reality, the last trailing 12 months equals the most recent full year, so you're not going to see any difference between those two. So with that, EBITDA has been up 14% year over year, and operating earnings up almost 15% year over year. So this company is growing very, very quickly, especially for a retail brand. Gross margins have shrunk ever so slightly from about 13% to about 12.5%. But operating margins have increased from about 3% to about 3.5%. It is very typical for wholesale companies to have razor thin margins, so this low number does not worry me at all. The same can be said for return on assets, which are hovering around 9% currently, and that's actually really good even when you compare it to other retailers that are not wholesale retailers like Walmart or Target. Shares outstanding for Costco have actually gone up ever so slightly, which caught me really off guard, to be perfectly honest, but the company is not diluting shareholders at any sort of major pace. It's less than 0.2% per year. Their cash and short-term investments have gone up nicely at almost 13% per year and sit at $15 billion currently. Compare that to their outstanding long-term debt, which is just over $5 billion, and we can see that Costco is in a very safe financial position. In fact, their interest expenses are actually positive, so they earn about $300 million per year in interest. Free cash flow has grown nicely as well, although it is a bit variable, and that's common for retail brands. And on a per-share basis, we see that this steadies out a little bit more, but it is still a little bit variable. But again, totally fine, totally normal for a retail company. Costco's dividend has grown exceptionally well at 12% per year, and this does not include their special dividends, which they have paid out. And just for some context, the most recent yearly dividend per share was $3.84. So compare that back to what I said earlier about their $15 special dividend going out, and you can see why shareholders really like Costco, because they return a ton of money through special dividends to their shareholders. If we look at the company on a dividend yield basis, we can see their average yield is 0.91%, and that's represented by this red line right here that goes across the entire graph. And this black line represents the closing dividend yield on a weekly basis since 2018. And we can see that the current yield is 0.64%, which is below its average yield. Meaning on a dividend basis, Costco is looking a little bit overvalued. To be more precise, it's about 29% overvalued, which in my opinion is a bit alarming, at least on a dividend basis. But as you'll see in a minute, Costco is overvalued on pretty much every metric, at least in my opinion, so I'm not totally surprised by this. The company's payout ratio is really strong with the exception of 2021. Its current payout ratio is under 20%, which means there's tons of room for Costco to continue to increase their dividend over time. So any investor that is interested in dividend growth should really like what they see from Costco currently. Moving over to our PE graph, the red line now represents the company's average PE since 2018, which sits at 31.44. And the black line represents the closing price to earnings ratio of Costco for every week since 2018. And as we can see, the company currently sits at a PE of 43, which is 37% above its 5-year average, meaning that on a price to earnings basis as well, Costco does look overvalued today. And moving over to the value chart, this purple line represents my estimated fair value of Costco at a given PE. Currently, that fair value PE sits at 15 because the company's projected compound annual growth rate in the next 5 years is only expected to be 8.12% per year. So Costco's growth is expected to slow down quite a bit. And so in this calculation, I'm just being conservative on the fair value PE. So if we assume a 15 fair value PE, Costco's stock is worth $212 per share. Obviously, as we can see, Wall Street has never traded Costco at a 15 PE in the last 5 years, and that's because Costco is just an excellent company that commands a major premium. So if I update the fair value PE to 30, which would more closely match its average PE over time, we can see that Costco still looks overvalued for sure, but at least in this case, we can see an approximate fair value for the company that makes a little bit of sense, at least when we compare it to the previous 5 years. And in that case, the fair value is $425 per share. With Costco trading over $600 per share, that means that again, it is still overvalued, and I think it is probably set to correct or maybe just kind of sit around that $600 per share range for a fairly long period of time. Moving forward in time, if the company does grow at 8.12% per year, we can expect by 2024 for the company to be worth $460 and approximately $537 by 2026. So our 2026 estimates are still less than the closing price yesterday of Costco stock. So I think this chart is really just confirming what all of the other charts have told me in saying that Costco is probably overvalued currently. Overvalued or not though, Costco is still an amazing company. And first and foremost, what I really love is that it has a bulletproof balance sheet. The company has 3 times as much cash and short-term investments as it does long-term debt, so it can pay that off at any time it wants to. On top of that, the company generates a ton of free cash flow and has pretty darn good margins considering it's a warehouse retail company. Secondly, Costco appeals to high-income consumers. I am using a little bit of knowledge that I found outside of this video that I haven't included, but I read somewhere that the average Costco consumer earns something like $150,000 per year, US of course. And when you appeal to clientele like that, they're a lot less price sensitive, and the economy tends to affect their lifestyle and their budgeting a lot less than somebody who earns $30,000 or $50,000 a year. So that adds a little extra stability to Costco's earnings and allows them space to up their membership prices, for example. And finally, I really like the consistent and prudent performance of this stock, of the management, and of the company. They know what they're good at. They stick to what they're good at. Costco has not expanded at like a breakneck pace to the point where it's just overexpanded. They're being very consistent and careful and selective on how Costco expands, which is really nice to see. And of course, the most important decision of all is keeping that hot dog at $1.50, because I don't know about you, but those Costco hot dogs are incredible, and that's what brings me in every day. Well, maybe not every day, but if you know, you know. And so with that, we're just going to move into the only con that I can think of, which is valuation. I love Costco as a business, as from both a consumer perspective and an investor perspective. There are tons of investors out there who love Costco. The late Charlie Munger, may he rest in peace, absolutely adored Costco as a company and loved the stock. And when someone as good at investing as Charlie Munger has nothing but the best things to say about Costco, you can't really argue with that. And I'm not going to try to. My only issue is that Costco just has a really high valuation currently. Even if it was closer to a more normal PE of 30, I would still struggle to buy the stock, because I think that a 30 times earnings is a really high multiple to pay, especially for a company that's not growing at 20, 30, 40% per year. It's only expected to grow at 10% per year. And so for me personally, I just see the valuation as the only hurdle, and it's a big hurdle for Costco. And so with that, I do not see myself investing in this company today. But of course, as I point out every time, this is not financial advice. You are free to make your own decisions. And if you do decide to buy Costco stock, you are essentially coming to the same decision, the same conclusion as so many intelligent people on Wall Street and so many intelligent investors everywhere, that basically says Costco is an excellent company, and I don't know anybody who expects Costco to disappear anytime soon. So with that, thank you so much for watching this video. I hope you learned something interesting. And if you have not already, please like my video and subscribe to my channel. It would really mean a ton to me, and I cannot wait to bring more stock analysis videos to you. So with that, I hope you guys have a wonderful day, and I will see you in the next one. Goodbye.